If you just started a limited company in the UK or you're thinking about starting one, this video is for you. This video will help you save loads of time, unnecessary wasted hours, also increase your profits and hopefully save you from a tax investigation. Because let's be honest, who wants one of those? Hi, I'm Michael from MDH Accountants. If you like this video, click the bell and subscribe. That way you'll be notified on all of our business tips, tricks and tax saving advice. These are the 10 most common limited company myths business owners believe, and they're all wrong. Myth number 1, I can use the company bank account however I want. Wrong. Because if you're running a limited company, that is a separate legal entity. In layman's terms, it's an imaginary person. So if you are taking loads of withdrawals from your limited company bank account that's not supported by either expenses reclaimed, salary, dividends or interest payments, that will make your loan account overdrawn and it will cause you extra tax problems. Don't do it. Myth number 2, I do not need an accountant, I've got QuickBooks. Now, while cloud accounting software are very important because they save you loads of time and also needed for making tax digital for filing your VAT returns, you will need an accountant to help you get those accounts fully reconciled, which turn into a set of company accounts, which turn into a corporation tax return to make sure you are compliant. These cloud accounting softwares do not do this. So please don't fall into this trap. And also you want to make sure that they are going in accurately too, so you avoid a tax investigation. Myth number 3, I haven't made any money, so I don't need to file anything. Wrong. You need to file accounts at Companies House every single year. And that could be if you've made no trade at all, whether you've made a profit or a loss. The end. You also need to file a CT600 unless you're not trading. So if you're a dormant company and there's no activity at all, there's no requirement to file a CT600, but you do need to notify HMRC. But what you do need to do is you need to record all of your profits and pay your tax, or record all your losses that you either carry forward or carry back on a company tax return each year. Just because you haven't made a profit and there's no tax does not mean you don't need to file things for your limited company. Do not fall into this trap. Myth number 4, I have limited liability. I am protected. Sometimes. Now, as long as you followed the Companies Act and you haven't done anything that's completely illegal, it's likely that you will be covered. But the things to bear in mind with a limited company is, if you're getting a loan and you're a brand new company, a bank's not going to say, it's okay, Mr. or Mrs. Client, if you can have this loan without any form of guarantee. They're going to make you sign a personal guarantee. A personal guarantee means that if the business goes under, you will be personally liable. So that liability they can change you for personally, and you're not covered by limited liability. Myth number 5, I'll take dividends and just avoid all tax completely. Now, wouldn't that be amazing if we could just declare dividends and it's all gone? Bad news. Dividends are after corporation tax, and your corporation tax on the current rates is going to be somewhere between 19 and 25%, depending on what the profits are within your company. So just remember, when you're declaring dividends out of your business, while we'd all love these to be tax deductible, they're not. So as a business owner for yourself, when you're actually preparing things mentally, you want to go, what is my corporation tax rate? Plus also my dividend tax rate, depending on whether I'm a lower or high rate taxpayer. If you work out what both of them figures are and add them together, you'll find out what your effective tax rate is. As a business owner, I think this is a key number that you should know going forward with your limited company. I don't need to worry about that until I feel like it. Wouldn't that be a nice place to be? And I would probably pitch mine in 10 years' time in a galaxy far, far away, but it's simply not true. If you turn over more than £90,000 per year, you would normally have to VAT register. The things that would go against this is if your business is exempt. So if your trade is exempt from VAT, that's the only time where you don't need to worry about VAT, because it's exempt, it's outside. But if your business is turning over more than £90,000 a year, it's likely that you end up having to do quarterly VAT returns. You'll have to put VAT on your sales, but the benefit is you get to reclaim VAT against your costs and you only pay over the difference. But hard hat, you are a glorified tax collector and you do it for free. Myth number 7, I can run everything through my personal account. And there's one answer to this: stop. Because if you've got personal money going in and out, it could easily get lost. It could easily be defined as personal. Just don't do it. Now, sometimes a business owner will have genuine business expenses that are paid for at their own pocket, that are wholly and exclusively for their business. Yes, claim them as an expense, but don't put all of your personal account into your company accounts, because it will just become a massive muddle and it's just not very professional. You need to make sure all of the transactions are in the limited company name, because they are the entity that actually owns that transaction. Myth number 8, I'm the only person in the company, so I don't need a payroll. Technically, that's right, but ultimately you are missing one hell of an opportunity. So if you're taking money out of the business, salary is tax deductible. You can declare a salary out of business is completely tax deductible, and why wouldn't you do it? Because if you're allowed to earn £12,500 tax-free and the company gets corporation tax relief, happy days. So while it is possible to not run a payroll for your business, why would you, when you've got the benefit of saving corporation tax and also paying not very much income tax on it at all? Now, what you need to bear in mind when you're looking at this video is what your other income is, because if you've got multiple employments, then some of these could be taxable if you had 2 employments at 12.5 grand each. Bear that in mind, especially when you're doing your tax planning for the year going forward. Myth number 9, HMRC will inform us for everything that I need to do. Wrong. HMRC will not tell you everything that you need to do along the step of the way. While their website is there to help and while their agents are there to help you, ultimately it's your responsibility to understand what you need to do to fill all the requirements as a director and an owner of the company. One, that make sure you tick all the boxes from Companies House and also tick all the boxes from HMRC. Now, while HMRC may send out reminders, it is your responsibility. It's not the accountant or the advisor or your bank manager or HMRC. You need to know this stuff. Now, you don't need to go and do a degree on it or read an Encyclopedia Britannica to understand everything, but you need to know the key bits, because that's what you took when you decided to set up your own business. Myth number 10, if it doesn't work out, I'll just walk away. Wrong. What you've got, if everything does go wrong and potentially that you are insolvent, which means that you've got more liabilities and assets, you will need to go through a formal liquidation process with a liquidator. You cannot just run away and it all just disappears, because it will be on your record. There's a way that you need to define if your company is in trouble, but ultimately what you're looking to do from a business is really exit. So while I started off with a negativity there, where you should be within your business and where your target and where your plan is going to be is not how do you then liquidate, where you basically got a load of liabilities and people get knocked. You should be in a position where, oh, how do I build this business into an amazing shape that someone is absolutely clamoring to me to buy it? So just remember, if you've got a limited company and you're stuck, you need to sort out your own mess. But ultimately, your goal should be is how much you can sell your baby for. Hope this video has really helped. But if you're in a position where you're looking to grow and scale your business, click my link below. This will allow you to book in a 30-minute growth call with me. No fluff, let's get straight down to it. Let's find out where you want to get to and work out what steps you would need to go into the future. There are 7 key drivers if you're looking to grow your business. So if you click the link below, we have our business growth program, and that's designed for business owners exactly like you. Click the link below, as we'd love to see you on this course today.